following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the Options Insider Radio Network, upon which many of you are probably listening to this fine program right now. And if you've been listening to this show for a while, you know it's not just me here on the old all-star panel. No, indeed, not by a long shot. I am joined today by a colorful cast of characters. You know them, you love them. I shall introduce them to you forthwith, starting off with the man beaming in the farthest from the great state of Maine, known in certain circles, perhaps even here, as the Rock Lobster, one Andrew Giovinazzi from OptionPit.com. Mr. Andrew, welcome back to the show, sir.
Always a pleasure to be on the Option Insider Radio Network. Always a pleasure. I don't even know what to do with myself. It's so pleasurable.
I assume this time period counts as forthwith, so I assume that that works for you. If not, we can always do it again.
No, it works.
I'm good. Good. I'm glad.
It's all good.
I like
Everything's working. I hate that phrase, but everything is working fine.
Next up, beaming in the other way, in order of proximity, we have the man holding down the Options Express hot seat. You know him as the Viceroy, primarily for his jaunty caps. He is Alex Jacobson, the educational major domo over there at OX. Alex, welcome back to the show, sir.
Also a pleasure to be here, and another Tesla Monday.
What day is not a Tesla day at this point? It's just crazy.
Yeah,
I think
Tesla's becoming the new Apple.
Yeah, there we go. I'll have to look at it. You probably count the number of down days this underlying his hand on one hand over the past, let's say, 2 quarters or so. This has just been an extraordinary run for this name. We'll get to it in a wee little bit, but first let me introduce the last colorful character holding down the seat here on the old all-star panel, beaming in from a middle distance, a wee bit outside of Chicago, in lovely scenic St. Charles, Illinois. You know him, you love him as good old Uncle Mike Tosaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
It's always a pleasure to be here, as was with the other two gentlemen. And it's always also exciting now the fact that I feel that my town has been respected and that you Chicago folk believe that we have running water and internet connections.
And fine, lovely outhouses with beautiful moons carved in the door. I think those are very attractive.
I was about to say, what gave you that idea, Mike? You didn't say anything about internet connections and water and all that stuff. You just...
It hasn't been mentioned.
It was a lovely
months.
Forest thing.
Be thankful for running water. We had no water in Deerfield about 8 or 10 days ago, and that's a joy.
Okay. I guess I just need to spend all my time in Chicago, I guess, I think, where there is running water.
My family and I love it when we rent our buggy and head out to St. Charles area. It's a good, nice little throwback for us. It's good. It's good. The buggy whip, It's fun. You have a little blanket, get some oats for the horse. It's fun. It's like going back to Pennsylvania Dutch country.
The ladies wear the hats with the little thingies that you tie underneath the chin, like that. The old bonnets. That's what they're called, bonnets. They wear bonnets out there in St. Charles.
Any barn raisings this weekend, Uncle Mike?
Hey, if you'd have actually been in St. Charles, we'd have known about it, buddy. We know it when one of you Chicago folks comes down.
The bell goes off.
Yes.
There's strangers lurking in these here parts. All right.
There's foreigners in our town. Foreigners.
All right. I think it's time with that to kick off our first segment of the show, the Trading Block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down the day's worth of action. Wasn't a whole heck of a lot. Lighten up the old tape today, and it seemed like we have one narrative in place until pretty much right at the end of the day. This is one of those literal days that Alex often jokes about where we can tear up our notes. I actually wrote up a bunch of notes to discuss on the show about what was going on in the market, and then it kind of got thrown out towards the end of the day because we closed. It was a rally most of the day, most of the major indices up fractionally. NASDAQ was up about 0.5%, and yet we closed down nearly 0.5% on the S&P, and again, about 0.5% on the Dow. NASDAQ unched, which means it gave up that full 0.5% rally that it had most of the session, and pretty much all of that came on the heels of some late session comments coming out of Washington from our friend Mr. Kerry over there that, what did they say? He said that Syria's use of chemical weapons is undeniable and that this international norm cannot be violated without consequences. Whenever the sabers start rattling, that's when the market starts dropping, and we saw that today. Vol had been vacillating, not much of an uptick at all in Vol. We see the VIX cash now moving up a full point, or to get Andrew angry, 7.2%. There you go. Just throw a little red meat out there for you. But it was a quiet day until the end of the day. So maybe we'll start at the end and work our way back. Andrew, aside from Mr. Kerry's big announcement, which I think all of us are still kind of trying to digest because it just kind of came out a little while ago, what else really caught your eye there in today's activity?
It's funny, I was talking just with a client this morning. We were looking at watching how if they're gonna actually take the 3-day holiday, how early they're going to take it out of all the options. And we were watching the SEP 6 term just evaporating. And I think it was trading down to about 11% volatility at some point, or 11.05. And I think it closed a little higher than that right here at the end of the day. And I said, what's going to move it between now and the 6th will be, something in Syria, something in Egypt, something like that. And it actually rallied up about $1.50 from there, 1.5 vol points.
Our friend Mr. Kerry put the holiday back in before it even came out.
he did. I think he put the holiday back in real fast. And if what are they going to do? Right? They're going to do GOTS. They're going to make the Israelis do it. Who knows? But I don't think they're going to get their hands dirty. They've gotten away with it so far. But we'll really actually see what happens with all this.
All the prognosticators are already.
The market was actually just kind of lumbering along all day, and then, as you said, tear your notes away in the last 45 minutes of the day. It was sell Mortimer sell. So
all the prognosticators are already talking about perhaps a cruise missile strike on Syria. So maybe that's the opening salvo here. It sounds pretty limited, so I don't think that's going to merit a tremendous sell-off. That's all we get if they do.
I'll tell you what, though, it would take those guys out of play. I mean, they just say, okay, Assad, your compound is gone, boom, and it's all over. So that would be awfully fast.
Yeah, I don't think anyone's envisioning a serious boots on the ground initiative like we saw back, Somalia, where they had the Marines coming on shore and the media was waiting for them there on the beach.
Yeah, I don't think we'll be seeing that.
No, I don't think we'll be seeing that. Hopefully we never see that again.
Clinton lobbed bombs at Saddam Hussein all through the 90s, and I believe we had a small rally during that period. So
a wee bit of a rally.
A little bit. Market only was up, what did it double? What? I think it was up like 180% in 7 years or something.
All right.
So I mean, the Syria thing will come to an end at some point. But the market is, what you did notice though, is how really thin and skittish things are. because we're still waiting. This whole taper thing, I believe, still putting the market on pins and needles, because as it's unquestionable that it has to end, but the Fed has really not done us any favors by keep pushing the timetable around a little bit and sort of screwing with everybody's head. So, and I just think the market reflects that real thin.
Yeah, I think saber rattling aside, there are some other stories that caught people's eyes for most of the day. Of course, there's still a lot of fallout coming from last week's technical meltdowns, you could say, on several areas, both in the options realm and in the broader NASDAQ and equity realm. And the SEC is doing its own saber rattling now, calling everyone to task and doing a lot of investigations about whether these exchanges have their priorities straight, whether they're favoring the HFT, quote unquote, over the proverbial grandmother in Iowa type trader, and all the other navel gazing that's bound to go on in events like that. I know a lot of you wrote in last week and this week with all kinds of questions about that stuff. I think we have a couple later in the mailbag that reflect that. So it still is top of mind for a lot of people. A lot of people are starting to worry about whether this is now the new norm of these types of errors and meltdowns are going to be just kind of par for the course going forward, and how that should impact your trading going forward. We also saw on the exchange landscape our friends Bats and Direct Edge joining forces. I think we're going to see a lot more of this. We're already seeing ICE and NYSE following suit. They're much more of a derivatives play, though. Bats obviously has Bats options. Direct Edge, not so much a player in the options space, but still an interesting one to watch. Both of those players have been down overall in terms of net volume, so maybe by joining forces, they could make some consolidations that could spice things up. Uncle Mike, I know you were probably, like the rest of us, kind of probably a little bit bored with today's action until the final moments of the day. So what, if anything, caught your eye in today's activity?
Just the low volume in general that we had. I think you're right in that with the people spooked as they are, it's on a lower volume day like today. We wait till later in the day, and the Secretary of State comes out, says a few things, market goes down, and waiting to see what happens once we get some people back in the market again.
Yeah, we got another week or so before that really starts happening. Post Labor Day here in the States is when people tend to start coming back from their sojourns in the French Riviera and whatnot, and they start to actually getting some volume back in these here old markets. So it'll be interesting to see what we see next week and what kind of volume we see, and if these markets start tightening up and getting a little bit more deep and liquid again. Moving on to some other headlines in the options realm. Alex, I'm not sure, you're probably not going to like this one, so cover your ears. But this one probably falls into the duh category of the day. There aren't too many groups out there that really specialize in options research. I can think of a couple, really, and one of them is the TABB Group, and they do some interesting little studies here or there. This one kind of falls into the bit of the no-brainer camp, but they put out a report today saying that they predict options commissions to keep shrinking over the next couple of years. I think anyone who's listened to this show or listened to what Alex has to say or any of the OX guys have to say, it's pretty much that's a no-brainer for anyone who's been involved in the options business. They say in 2012, commissions were about $2.8 billion overall. That's, of course, institutional and retail. And they're saying they expect options volume to continue growing by about 6% a year, but commissions will decline about $100 million in each of those years. Of course, gotta love analysts. Who knows where they base these on? This year's volume, pretty easy to kind of guesstimate because we have half the year done. We'll see what happens next year. But they also said that this year for options trading for less than $1, the buy side is paying 99 cents per contract. That's down from $1.08 in 2012, or a decline of 8.3%. They attribute that to a variety of factors, including brokers tiering their rates, offering discounts to high-volume traders, and then agency and inter-dealer brokers challenging the full-service houses and offering steep discounts. We can probably corroborate a lot of the latter there. We've seen a lot of agency desks springing up over the past few years. Here in Chicago in particular, there's a lot of guys are leaving the floor in this post-market maker diaspora and turning to other interesting and related things, and one of those seems to be agency desks. I'm seeing a lot of these guys propping up in that space. So interesting stuff. Alex, I'm assuming none of this comes as a big surprise to you.
No, and I will go out on a limb and say in this calendar year, you will see probably 2 to 4 of the competing names, brokerage houses, will go away. Either more consolidation or just straight acquisition. As there's been compression in payment, more maker-taker, business is tough. The TABB Group is right. I mean, that's no secret. But I think some of the players on the fringe here, especially in the environment now with Penson being gone and what it costs to clear at Apex, I think you're going to see some of the fringe folks go away. If you read Barron's this weekend, they even talked a little bit about market-making firms going away. And, I get accused of being the downer, but the business is going to have to evolve here, and there are too many firms, and market making has gotten tough. And, we've seen this before. I've been around here for 4 decades. I've been in the industry, and you go through periods kind of feast and famine. And a lot of the e-commerce business lived off electronic trading, the ISE, competition, multiple list, big payment. And now the evolution is kind of more back to the norm of what we saw in the 90s, and I think we're going to see some compression in volume. What I hope we don't see, and that's especially true with consolidation of exchanges, is a rise in costs. I hope that's not the case.
So 2 to 4 retail brokers being gobbled up and or merged through the rest of the year. 4 would certainly be something. 2 I could probably maybe see, but 4 that would be quite an aggressive bit of consolidation.
Yeah, well, come back on January 1st, and we'll see how close I was.
Yeah, we'll mark it August 26th. There, we got a little bit of time for these deals to unfold. But you're right, the things going on over there at Apex, the collapse of Penson, the model is changing for a lot of these firms. At the same time, the cost of acquiring the quality options customer, of course, the people who listen to programs like this, that cost is going up. So it's a very interesting realm to be in, and one that I don't envy you guys having to slug it out in that space. It's the reason why I don't run a broker, and that's one of them. All right, moving on to the commodity realm. We don't have Mr. Matthew Bradbart on today, our commodity major domo over there, but subbing in is his able partner, good old Uncle Mike from RCM. And Uncle Mike, I know you love pretty much the precious stuff. You're very much a lady in that sense. You love the sparkly metals. So what did you see in sparkly metal land today? I'm guessing there's some vol going on out in them dar hills.
That there is. Yeah, just looking at GVZ, George Victor Zebra. That's the ticker symbol for the gold volatility index for those of you that want to track this at home. We had a little bit of vol increase. It's up 4% on the day. It gapped up, so I think a lot of it had to do with the weekend effect, so to speak. But on it, we did have a little bit of a run-up after John Kerry's speech. I'm just looking at it today. Around 3:30, it did come up a little bit, not too much, but nonetheless, we are getting a little bit more vol into the metal market. And this is something to where, as a collar trader, I'm excited about it just because of the fact that I think it will add to opportunities in a lot more areas with which we can make adjustments and do different things. And the vol in this market's been kind of going sideways for a while, and I'm excited that it's starting to come back into the market a little bit.
Yeah, good old GVZ has been an interesting one to watch since they launched it. It'll be really exciting when they get some some serious tradable paper out there in good old GVZ. We can actually do something with it. Yeah, exactly.
Well, the volume on GVZ today is twice what it was last week. Did you know that?
I didn't. I'm just looking at it again. I mean, I have it on my tick list, but
4 contracts that's averaging a day. Open interest of 35 contracts.
I just made that up.
I know, that's quality. That's some serious volume.
Yeah.
Yeah, this
nonetheless, it's a good little bench. It's something. I mean, typically when I'm looking at vol and gold, I'm looking at the individual options, and I do that even on stock market things. I look at the VIX. It's kind of an indicator, but it's not something that I base things off of too much. But it's just kind of a nice little indicator to take a look at. I like it. No,
it's great. I mean, that's what it's designed to do. I remember just not very long ago it was just dying in the teens, the mid to low teens, and we haven't seen that for a good long while on that thing. So lots of excitement in Goldville.
I don't know here. It's saying here the average open interest is 66 contracts and it's only 35 now. So half the open interest right now in GVZ. So maybe that's a dire indicator in and of itself.
Well, when I said twice, I was just assuming that it would have doubled like from 1 to 2, or maybe I could have found a statistic like that somewhere.
This is an impressive one. For all the interest in VIX, for all the interest in gold and GLD, for whatever reason, this one doesn't seem to really be resonating yet with
now,
the masses.
Do they have trade the future on the index yet?
I don't think they do. I think that's part of the problem.
See, that's the thing. Until they trade the gold, until the VIX didn't take off till they listed the future. And to be honest, I don't know if they trade a gold future, a gold vol future yet. Just the options don't trade until there's a future. It's hard to trade an option without an underlying. I'm sorry, but.
Yeah, a lot of people have discovered that to their much dismay that it is very difficult to get that stuff going without any sort of underlying. CME is going through some issues as well with some of their things that they've licensed that they want to put underlyings on. So I know both the CBOE and the CME would like some more underlyings to accompany some of these products, but that's a much more laborious process. But once that gets going, we saw the same thing with the alpha indices over at NASDAQ and some of the other products that they had, where they really didn't catch fire until there wasn't or they really didn't catch fire at all. And one of the problems they blamed on it was a lack of an underlying. So we've seen this across the board that people they dive into the options fray, listing options with no real actual product underneath. Perhaps not exactly the best case scenario.
I mean, one of the few ones was the OEX, but there was still a basket, You could still trade the OEX basket. I mean, it didn't take long for them to figure that out. So I just don't see listing an option without the underlying, a tradable underlying, I think that's a waste of time and money. But Alex might know a little more about that. He spent a little more time on that end. But I don't see how it happens, but that's just me.
All right, and that is going to do it for the old trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it is time yet again for the odd block, the portion of the program. I know the reason a lot of you guys tune in because you want to take this dive with us into the seedy side of the options business. We're going to kick things off today with probably the shadiest name we've ever talked about here in the odd block. I just feel dirty even talking about it. Yes, it's Facebook. Everyone's favorite name to talk about. You may have heard of this one every now and then. We may have chatted about it here on the show. It's been making a lot of headlines of late because it rallied north of the 40 handle. That was a big deal. I know, Andrew, I think you wrote up something on the old blog there as well about Facebook turning 40. So there's been a lot of people diving into the Facebook fray. As soon as it hit the IPO level. Now that it hit 40 again, there's been a lot of Facebook love. Today was no different. Despite the news towards the end of the day, Facebook's still closing up about 2%, or about 80 cents to 41.34 on the day. So the upside love continuing here for Facebook. And this is another one. This one, they're talking about some volume today. Facebook just lighting up the tape, averaging about 250,000 contracts a day of late, which is a pretty hefty sum. Today doing 740,000 contracts. This is just knocking it out of the park today in terms of what was going on out here in Facebook. We have just one small part of it to discuss today, but there's many different ways you can parse this sea of volume here, Mr. Andrew. I think we'll start with what we profiled here, of course, on the old optionsinsider.com. Of course, you can head over to the website to read these full alerts of this and every other unusual activity alert we've dug up today on the old website. Today, we're looking at the Facebook Jan 2014 3750. I guess you can call this a combo, maybe a collar, maybe a risk reversal. It really depends on how you tend to look at it. We had someone coming in and selling calls and looks like buying puts. So looks like we had, for about 52 cents here, doing that nearly 10,000 times. About 9,750 contracts. Open interest about 17,000 on the calls and about 2,100 on the puts. Of course, that doesn't mean anything in a name like Facebook doing 750,000 contracts a day. But Mr. Andrew, walk us through this a little bit longer term trade going up out here in Facebook.
Yeah, this to me is like, okay, somebody bought some stock in Facebook. It could be, or it could be somebody that bought it many moons ago. allow the IPO, right? So they've held it. I'm speculating, of course. So that's because they bought the 37 put, right, which is $1 below the IPO price. So like they're only going to get me once on it going below 37. And so they buy the 50 call or sell the 50 call on the upside. It looks like buy right paper. They bought puts, sold calls, and looking for a nice little return through January. Up $8.50 in 4 months, and they're protected at the IPO price. It just feels like somebody that got an allocation of stock on the IPO. They've been sucking on it ever since, and now they actually might go make some money on it. So
I'm digging here through the paper while we're talking just to see what accounted for that just massive explosion in volume. And it seems to be, there's no one massive 100,000 lot straddle or combo or anything. It's just everything. It's just everything. People wanted everything Facebook today. I mean, the Note 48's traded 17,000 times, the Note 49 15,000 times. You got even little dinky strikes like the SEP 25 puts going up a ton of times. What do we have? SEP 26 puts 1,500 times trading today. The SEP 29 calls, deep in the money calls, or 30 calls trading 1,000 times. I mean, there's just paper across the board. A lot of this stuff looks like it's closing clearly because these strikes are not really in play. Here's your total of 10,000 of these Jan 37 puts. It's just across the board. It's just crazy. Do they do it on a ratio? Do they do it 1/2? Because it looks like 20,000 of the 50s.
I just saw 9,500 contracts right around there, 9,750. I didn't see the ratio.
Maybe maybe they piled in with an extra 10,000 of the calls. It looks like 21,000 of the calls went up today. So maybe they're 1/2ers.
The blog I did Friday, that was what I said. I mean, the volatility's going up in here. Everything's just going up and up. It's $40. It's safe, and now all the mutual funds will pile in because they couldn't trade it at 16, but they're going to trade it at 40. That's what happened.
As I've always said, why sell one when you could sell two? Words to live by, listeners. But yeah, them obviously are listeners to this show, taking advantage of some of this upside skew here in Facebook, and perhaps even writing a ratio to get those puts off here. Moving on to one of our other favorites here, not perhaps as much as Facebook, but still an interesting one. Good old TBF. This is the ProShares Short 20-year Treasury Fund. This is the name, clocking in a whopping 494 contracts a day, doing 2x that today. So size paper going up out here in TBF. Pretty much all of that coming on these DC28 puts. We saw how many total on the day? Let's see. We saw 600 of these DC28 puts going up for prices around a dime. What say you that these are closing, sir?
I felt that was pretty strong closing. They bought them. I don't think they made a whole lot of money on them because rates clearly have done nothing but gone down, which is good for this product. Since it's gone basically straight up. I think it's trading very close to the 1-year high. So my question is, why would you close them for a dime? That's why it was so weird. It's like, okay, it's December. It's a December contract. Why sell them for a dime? Maybe they're just giving up the ghost and saying, I'm never going to get any money back, so I might as well sell this. So there was a 10-cent bid out there. It looked like the seller took the bid out, and then paper eventually came in and bought the balance of those puts. So, but I guess it's a dime 500 times, so it's $500.
Yeah, he saw that bid sitting there, and he couldn't resist. He had to take them off. He knew there'd probably never be a bid there again.
Yeah, well, if this QE is so, again, for a dime and you have out till December, you never know what happens. But I think the interest rate genie is out of the bag now. But I agree. It was just an odd. It boggles my mind to sell puts for a dime like that with 4 months to go. But
that's how you made your fortune. You're one of those teeny put sellers out there on the SIBO. You know it. If I know anything about you, Andrew, after having done this show with you for a while, is that you love nothing more than blasting out some teeny premium.
Was Erwin there when you were there? Yeah, that guy did very well selling teenies, I have to say.
That was. I'm joking, listeners, but that was indeed a lifestyle for a lot of guys out there, particularly in the SPX pit. It was a very high turnover lifestyle, shall we say, but it was indeed a lifestyle. Anytime a bid popped up in that book for anything, anything out in the wings, bam,
Yep.
there
all
went.
the good backgammon players did it. They just, okay, this has infinite amount of edge in it. I'm going to sell this.
I love it.
So it worked probably until 2008. It didn't work too good after that, I think.
Speaking of unusual activity, let's just wrap up here today with in the odd block with a I don't know if you guys saw this. A little rundown I saw with our friends over at the Journal, and Caitlin, she was highlighting some individual investor picking off some options trades ahead of the NASDAQ shutdown last week in NASDAQ stock and options themselves. But it was funny, they were highlighting trades of like 60 lots. I thought that was kind of funny. I was like, you don't see the Journal really devoting too much time to unusual activity amounting to 60 and 70 lots. I guess it was a slow day. But interesting nonetheless that someone's grandmother made some money out there in NASDAQ last week. They had like 3 or 4 minutes where those options weren't shut down on the other exchanges before they should have been, and so they piled in and bought some puts, and they did all right. Of course, this exchange didn't really sell off that much, only about $1. I think they were banking on a little bit sharper sell-off, but still kind of fun to see even the Journal diving into the 60-lot range. So next time you're complaining, listeners, that we're highlighting 500-lot trades, they're doing 60 lots over there at the Journal. So
try to give them 500 puts for a dime today.
There you go. That's size paper. Speaking of size paper, it's time to close out the old odd block and roll on into everyone's favorite segment, the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. Viceroy, it's time for me to hand you the reins to this here program. Before we do, let me just throw out a feeler, a wild guess, a stab in the dark, if you will, at what was lighting up your old tape there at OX. I'm going to guess Tesla, because you guys can't get enough of Tesla over there at OX, and perhaps maybe a little thing known as Facebook. How close am I, sir?
You are spot on.
Amazing. They call me Karnak, you know?
Yeah, that's remarkable. But I surveyed the desk just before we came on the air, and I was actually in a bunch of meetings today on a bunch of new products, and we'll be talking about those in the coming weeks. But I surveyed the desk, and they looked at me and they said Tesla and Facebook. And Tesla, it's been both the stock and the options. And one thing we're seeing now more here to a larger degree is we're seeing what I'll call really kind of people believing in it, because now we're seeing some out-of-the-money put sellers. The other thing that was lighting up the stock today was biotech, and obviously the Amgen Onyx deal, with both of them moving today, which is a bit unusual, but Amgen has always been a name that's been popular in the option community. Onyx has been a popular name lately. But we saw some traction in Celgene today, too. And Celgene has been popular for quite a while. Celgene is on TV a lot. It's a Kramer pick, which also drives a lot of folks. But it was the biotechs and Tesla and Facebook today. We do have traction coming back into Apple, and Apple is somewhat like Facebook, what we used to call a living dead stock, sitting in people's accounts, waiting for it to get back up to where they had bought it. And this move above 500 seems to have ignited some activity in it. Apple is also particularly popular amongst our customers who trade weeklies. Apple up here seems to be the weekly, one of the 2 or 3 weeklies with the most traction. So that's what was going on today.
Thank you for that, Mr. Alex. And now, because it's that time of week, we're going to keep on rolling right on into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, welcome to the mail block. This is, of course, my real favorite portion of the show, because this is where you guys get your chance to sound off. This first question, I've been waiting for something like this to come in for quite a while. I'm surprised it took this long, but one of you chiming in on the latest trend du jour here in the realm of finance, or perhaps virtual finance. This is a question coming from our website from someone who goes by Bitcoin Bravo, so I'm guessing by his handle that you can guess, listeners, what he's going to ask us about. He writes, any thoughts on Bitcoin, especially as the flows continue into this emerging digital currency, and we see with futures and derivatives, and we see a futures and derivatives market develop. Currently, there's a lot of arbitrage opportunities between the various exchanges. I've had my eye on this one for a while here, Mr. Bitcoin Bravo, because I thought someone was eventually going to write in about it, and also because it is an interesting idea, an interesting new currency. You don't see those come along every day. It's been around for a couple of years if you haven't really been following it online, listeners. It's essentially, the name is kind of a little bit disingenuous. There aren't really coins that they give you. It's more of an anonymous digital currency. Some of the things that make it attractive to people that it has, no central authorities, no Fed disseminating these. They're put out peer-to-peer, so that makes them relatively anonymous. People like that for a lot of reasons. Privacy advocates, perhaps people on the shadier end of the spectrum looking to get some of their deals done without tracing or money laundering charges involved. So a whole gamut of people are attracted to these things. And I've been watching these things for a while. They've had talk about just wild vacillations. They were trading pretty much ruined not that long ago, and then they had a huge run up, and just been all this news and talk about them. And you're right, there are probably a lot of arbitrage opportunities out there right now, which is what you see when any sort of new product that is almost completely illiquid, the way the Bitcoins are. I mean, there's so much that goes into them. There's Bitcoin mining and all of the software that goes into that to really actually get these coins out there into circulation, finding a reliable place, quote-unquote exchange. I mean, you say exchanges, but these exchanges, I think, are exchanges really in quotes, because some of them have been shut down recently for a variety of issues. There's a lot of risk premium built into that Bitcoin premium, or that Bitcoin price. So if you're going to be trading in these things, certainly bear that in mind. But my 2 cents on it is, I hear what you're saying about some futures, some derivatives. It's kind of hard to have we talked before about GVZ. That's a legit product, and that one is wide and very illiquid. Now, futures and derivatives on something like a Bitcoin, which is a completely illiquid underlying, that's a whole other ball of wax entirely. Talk about wide prices. I don't know if I would rely on any sort of puts that I could buy on any sort of Bitcoin futures as a hedge, or vice versa. It's something that I find fascinating to watch right now, but I haven't really jumped too far into the deep end of looking at how these derivatives are popping up. It kind of reminds me, a few years ago, there was a big push to make Hollywood movies are going to be the next big exchange, and Cantor Fitzgerald was behind that. They're going to make a big exchange devoted to those products with options and futures on it. That kind of fizzled. We'll see if Bitcoin can survive the fad. In the meantime, if you're willing to take a gamble, and also I think the clear thing you have to remember with Bitcoin is that, unlike other products, this thing could be deemed illegal at any moment. So you have to be comfortable with any capital you allocate toward Bitcoin. It could all go away. So as long as you're cool with that, as long as you understand the fact that some ruling could come down somewhere that essentially renders this currency illegal, and all of those dollars will be very hard to access, if at all. So as long as you're okay with that, and you have a very, very speculative amount of capital that you're willing to devote to Bitcoin mining and all these other things, it might be an interesting play just for educational sake, if for nothing else, to see how these currencies develop and these products develop off of them. Alex, Mike, or Andrew, anything you guys want to add here from Mr. Bitcoin Bravo?
Yeah, the whole thing, I like the idea about it, but if the government decides not to like it, it's done. The government can kill a business so fast it's ridiculous. So
yeah, and this seems to me like something the government would hate.
Because actually, I think it's going to work. I think it's a great conceptual. I think it's great. Trying to come up with the store of value is market-based in something, but, it doesn't pay taxes. There's no control from the Fed. I like it. I just want to try to figure out in what nice little nether region it's going to exist for people. So I would be surprised if it's around in 2 years, it's still operational and the G7 don't get together and destroy it.
Yeah,
it doesn't mean it can't survive, but
I mean, if you had some of that, you certainly had a nice run. I mean, granted, if you can liquidate those positions, and the exchange you're trading through is not shut down for fraudulent activity, then yeah, you might have had a good run. But I'm guessing, Uncle Mike, that all the grandmothers and retirees over there at RCM are not dabbling in Bitcoin.
We have neither grandmothers nor retirees are dabbling in Bitcoin. That is a fact.
Well, maybe we'll move on then to a question that I think a lot of your clients will be interested in. I'm sure you've had this conversation probably a few times. This is the question coming in from Charles P. He says, I am an employee of a very large, and in parentheses, widely held, so technology firm, leaving us to guess which one it is. Maybe our favorite Apple, maybe Google, maybe Amazon, who knows. He goes on to write, as you might expect, a substantial amount of my net worth is tied up in the stock of my employer. However, I am expressly forbidden from trading any derivatives in my employer's stock, even for hedging purposes. So my question to you is, how do I hedge myself in this scenario? And Uncle Mike, since I can see you champing at the bit over there, I shall let you take point on this one.
Well, a couple of things with which to do on this. First one is that I don't think that you should have a substantial amount of your net worth tied up in the stock of your employer. I think that's just general financial planning 101, and that I know you want to be part of the company, you want to believe in the company, and you want to do that, but in reality, I would say no more than maybe 20% of your net worth, and that's on the high end, should be attached to something along those lines, unless you're forbidden to sell stock at certain points, or unless you're stuck in some type of manner like that. In terms of what you can do with it, this is one that I don't know if this is necessarily what I would do, but I know a guy that did this once. He had a substantial amount of his net worth in an account, and he wanted to make sure that he actually had a brokerage. He actually wanted to make sure that he could sell at a certain point, even after a sell period. So when the stock was going down, he had it set up to where he had a bunch of the stock on margin, and he got a margin call, and it forced him to, and he was forced to liquidate the stock, and that's how he got around it, because he had a margin call in the account, so they liquidated it for him. I don't know how, obviously every company is different, but that's one thought. I don't know if it would apply to you. Then, of course, the other thing, some I'm getting on the from Mr. Longo on the IM here, you can buy some puts in for that stock in your grandmother's account, perhaps, but I'm sure you've thought of that in one way, shape, or form. The only other thing that I could think of is that you did something along those lines, but you got to be very careful when doing that. And if your net worth is substantial enough, you may want to consult an attorney in terms of seeing what you are allowed to do based on the writings of that, because that's something you want to be very careful with. And the regulators don't look kindly upon messing around with that too much. The last thing that I could add to that is if it's closely tied to an index, you could perhaps buy some index options, but once again, you're not really getting a true hedge.
So to Mike's point, and one piece of advice he gave is don't monkey around here. If you have an actual prohibition, then be very cautious. Don't find the ETF that has a lot of your stock. And the challenge in a lot of cases like this, I did this a lot when I was at Sabre. I went out and visited companies with concentrated stock positions, and a classic example, you're an engineer at Hewlett-Packard, you live in Palo Alto, California, you make $100,000 a year, but you got $20 million of Hewlett-Packard stock. $100,000 in Palo Alto, you can't buy a house if you haven't had the house for a long period of time. So a couple things to look at. Issue number one is don't monkey around. Don't do it. You will get caught. Issue number two, often the restrictions on hedging have a clock on them. So there are lots of firms who say you can't hedge for 3 years after the grant has been given. Well, then the broker-dealer community has solutions for that by crafting European option hedges that are 3 years and a day. So the first thing I would do is I would dig deeper and see if it's can't hedge or can't hedge for a limited period of time. Having said all that, the only other thing you can do is diversify every other penny you have. So let's say, for example, you are an engineer at Apple and you're making $100,000 a year and you've got $30 million in Apple stock. Make sure your IRA, your personal investment, investments are in things not correlated to Apple. So one thing is to diversify. And to Mike's point, when you do have triggers where you can't sell, diversify. But if you're truly prohibited, I had dinner with and this is a public story, so I can tell this. I had dinner with the deputy editor of TheStreet.com the day TheStreet.com became public. And the day TheStreet.com came public, that's Kramer's publishing arm, the deputy editor was worth 8 figures. But he had a 1-year absolute can't hedge restriction. A year later, it was worth low 6 figures. And we were having dinner at Michael Jordan's in New York and joking about how much we could tip, how much he could tip, and how much he could tip the cab driver. If you truly can't hedge, the only thing you can do is diversify. If you can't hedge for a period of time, look into that, because oftentimes the restriction is no hedging for a period of 2 or 3 years. And then what Wall Street can create for you is what's called a forward starting hedge or a forward starting option. And the thing is, your contemporaries at the firm are going to know what's legal. The HR department at the firm is going to know what's legal. Generally, they'll have relationships with 1 or 2 investment banks and banks. So dig a little deeper. But if you come up against a brick wall that says you can't hedge, the only thing you can do is diversify. And I know we're joking about buying it in your dog's name or in your grandmother's name. Don't do that. But dig a little deeper and find out if maybe you can do some kind of delayed start hedge.
I like your idea, Alex, about the 3-year and a day European style. That gets around the pesky early exercise issue that maybe some of those firms. I think a lot of this comes from just ignorance of derivatives too. I've heard refrains of this from a lot of different companies over the years. I am forbidden from using any derivative instrument of any kind to trade or do anything. I guess you can't even buy a call under that. You can't be rah bullish on your own company.
Yeah, and the laws have changed in terms of what is allowed from a securities law standpoint. The laws have changed a lot, but the company restriction is the company restriction. In the Street.com's case, it was ironclad. 1 year, you could do nothing. And, I forget what the stock was on IPO day, but a year later, it was a tiny fraction. And you saw $70 or $80 million in your net worth, wash away. And yeah, I get you want to put your fists through the wall at that point, but dig a little deeper. Sometimes the not hedge is not hedge for a specific period of time, or the hedge has to occur after the grant vests. So do a little more digging.
Yeah, that just sounds like a tragedy right there. I think if that was my scenario, my lawyer would be contacting my employer to say that you cost me all of this money with your demonstrable ignorance of derivatives, and now you owe me something. So that's
another possible solution.
Yeah,
but
the legal hedge.
Those have been looked at, and sometimes there is some remedy there. We talked about this in a couple shows back. We talked about the ability to hedge, and sometimes people say, well, you can't hedge mutual funds. You can do all kinds of creative things if it's legal. To Mike's point, sometimes you can get a correlation that's decent in an ETF. And, if my net worth is $10 million and 9,950,000 of it is in a specific stock, and I can't hedge in the stock, but maybe I can hedge in something that has a 70 or 80% correlation, having 10 million go away and having 7 million come out of a hedge is a whole lot better than having 10 million go away. So look at the possible avenues.
Yeah, that's a difficult scenario all around, Mr. Charles P. maybe you should contact Uncle Mike and he could walk you through some more specific scenarios. And definitely contact your HR, contact the legal team, hire a lawyer, find out the exact specifics of that restriction, because if it is 3 years, then I think a 3-year and a day European put sounds pretty attractive at that point. All right, that's all the time we have for the mailbag this episode. So we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, everybody, those car horns mean that it is time for our final segment of the program, of course, Around the Block, where we tell you what we're watching, what is catching our eye for the rest of this week. And I think what we were watching has changed quite a bit over the past couple of hours now with all this stuff going on in Syria. I'd imagine pretty much all of us are glued to the news to see what's going on, if we are going to be launching cruise missiles at Syria, or if there's going to be boots on the ground, or what's going on over there. Mr. Andrew, we'll start with you. What is catching your eye for the next few sessions here until our Thursday episode?
I guess we'll look at Syria to see what happens tomorrow, if there's any follow through. Non-farm payrolls next week. Are they going to take? They're going to take more juice out of the market. I think we might get some cheap options by the end of the week. Who knows if the Syria thing keeps heating up. Still watching Facebook. We have Facebook position, Tesla position, stuff like that. So, looking at all the busy stuff and like everybody else, waiting to see if the market can get past the Fed pulling out of it or not. And I think probably one of the bigger opportunities will be in emerging markets. I think by the end of the year, most of the prices we see should be what we're seeing right now, all those prices will be south of where they will be by the end of the year.
Yeah, this stuff keeps up with Syria. It might be a good time towards the end of this week just to have some long premium in over the weekend in case this all does go south. I don't think you want to be short a ton of premium with all this stuff unfolding. If it takes much longer than this week to unsort or to unfold, then you don't want to have just a ton of shorts hanging out there in case it all does hit the fan over there in the next coming weeks. All right, and Uncle Mike Tosaw, what are you watching for the next few sessions until we convene again at the end of the week here?
If you have another day like we had earlier today, I'll be watching my thumbs twiddle. Just kidding. I obviously want to see what's going to happen with Syria, and just like Andrew said, just watching the macro news and wanting to see how this market reacts when people get back from the Hamptons next week.
And Mr. Alex, last but not least, what is catching your eye for the rest of this week, sir?
So 3 things. Obviously, madman with chemical weapons in Syria. We're going to keep an eye on that. Watching VIX. VIX today seemed to go up a lot more than you would have expected, given the activity in the S&P. I have one of our clients here at Options Express has sent me all these metrics on the VIX S&P ratio, and makes the case for how it's about 10-to-1 normally. And if you look at the volatility of the S&P, which is the VIX, and the volatility of the VIX, it's about 10-to-1. And he had all his views on, like today, the move in VIX was about 16-to-1 versus the S&P. The S&P moved about 0.4%. The VIX moved over 7%. Clearly, that indicates that there's concern, and I think that's Syria in general. But we are still watching the 10-year, and we're keeping an eye on gold. But I think both gold and VIX are looking at the same metric, which is world events.
Unfortunately, that is indeed the case, sir, and that is going to do it for this episode of the Option Block. But before we go, let's check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you, the listener. Starting off with you, Mr. Andrew, what is cooking over there in the land of the pit?
Yes, well, coming up on Option Pit, we have, again, our revamped Platinum course, which we launch in September. And we are doing another VIX class, which I don't have the date on. I just heard it, I believe, from the CBOE today. We'll have a date firm for that, hopefully by the option block on Thursday. But they've proved very well received and successful in the past, and I assume this one will be the same.
All right. Thank you for that, Mr. Andrew. And now, of course, Mr. Mike Tosaw beaming in from lovely scenic St. Charles, Illinois, where the Skype gods seem to be frowning upon you, sir. Before they disconnect you yet again, what is coming up in the land of RCM?
Funny, the day that I was all excited about thinking that you respected the technology of my wonderful town, Skype certainly did not. So how dare I say such a thing ever again?
That one shared cable modem / DSL line out there that you all use, maybe the 14.4 dial-up, I think someone else is trying to get on it.
Yeah, I was going to say DSL, I don't even know what we have smoke signal internet, right? Anyway, we have Mike Cavanaugh. He is going to be making a repeat appearance back by popular demand this Thursday night, discussing his 3 building blocks of becoming a successful trader. Tune into that. We'd love to have you.
I know this Cavanaugh kid. He's an up-and-comer. Keep an eye on him. He's going far.
He's one to watch, that's for sure.
All right, and last but certainly not least, Mr. Alex, what's cooking in the realm of OX education?
Just showcase a couple of events. On Wednesday, we have David Hightower, author of the Hightower Letter, doing his third quarter outlook on grains, metals, energy, and interest rates. Later the afternoon of the 28th, Joe Cusack, our head of education, is doing a webinar on Bollinger Bands. And one other one a little farther down the calendar, Dan Gramza from the CME is going to be talking about technical analysis in an algo-driven world. That's on September 4th after we're all back from the long holiday weekend.
All right, thank you for that, Mr. Alex. And, of course, if you want to read more about any of the topics we discussed on the show today, perhaps with the exception of Bitcoin, we don't have much up there about Bitcoin, but maybe that'll change. Surf on over to theoptionsinsider.com. You can find all the unusual activity alerts that we discussed in much more detail, as well as many more we didn't get a chance to discuss on the old program today, as well as articles about the industry, about the market, breaking news from the options market, some education, some analysis, great stuff from a lot of the people on this show and a lot of our other shows on the network, all there on the website for your reading enjoyment. And, of course, if you'd like to join your fellow listeners here and make your voices heard on the show, a lot of great ways to do that. Of course, you can post a comment or a question in the show notes of this program on the website. You can find us on Twitter, twitter.com/options, or on Facebook, facebook.com/The Options Insider. And, of course, last but not least, you can reach us the old-fashioned way, questions@theoptionsinsider.com. Just be sure to put the subject line of the show your question refers to so that we know. Let me try that again. Just be sure to put the name of the show your question refers to in the subject line so we know how to route your question. And on behalf of Andrew and Uncle Mike and Mr. Alex and, of course, myself, I want to thank all of you guys out there in our ever-increasing listening audience for downloading and streaming and subscribing and for sending in such great questions. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.